Hello everyone, welcome back to, we should start calling this, let's start calling it like your weekly wave review. I don't know, I'm trying to make it like add at least some consistency to the madness that I do every week. But anyways, now that everyone's here, obviously what I'm going to do is like give you my current counts and thoughts leading into this week. If you caught my breakdown from last week, like my, magnum opus, if you will, whatever you want to call that, so far it's actually been like pretty much spot on. If you are looking for like the Cliff Notes version of that little paper, if you even want to call it that, there's this one guy I retweeted who actually took notes, and so I shout out to you. This isn't like your job or anything, but let me find it. 1 second. Close, but no cigar. There we go. Yeah, so this was like the, the basic cliff notes, if you will, of my last video. So I was calling for, a high of between 180 and 190, and obviously we got a little bit higher than that. Sorry, this chart is a mess, but the big level that I was watching for was, there were a bunch, but I'll run you through the process in a bit. It was just like 202 area, and when we got the news of the split and we rejected here, that was huge red flag. But I'll dive into that in a little bit. But yeah, this was like little Cliff Notes version. We were expecting anywhere from like a move to like 180 to 190s, followed by a big sell-off. And I think we are currently in the middle of that sell-off right now, and it is not done. That's my, that's my baseline view. And with that being said, really quickly, I'm going to dive into this count that I have here. I do have a bunch of counts, don't get me wrong, I have a lot, but this is my primary, meaning that this is the one that I see most likely playing out moving forward, but I will give you like a brief little rundown on the alt counts that I have as well. So, with that being said, let's dive in. Basically, without explaining too deep like what you're looking at, the correct order of notations to look at is purple, then white within the purple, and then like this little pink within the white. And then blue within the pink for this wave 3 here, this extended wave 3. So breaking this down simply, if we're just looking at or let me pull up a view that I was looking at before. Something like this, right? So if we were looking, I saw a few counts on Twitter where people were calling for this move up here to mark a wave 3. Now the issue with that is you can't do that. Like it goes against the rules. And so the reasoning for that is, if you count this move up to here as a wave 1 and this is a wave 2 and you're looking at this as 3, sure, you have the wave 4 tick at the point 3 at 2 retracing the low of the W4 or low of the wave 2, but here's why you can't have that. Hold up, my fucking it's my trader friend. Anyways, the reason why you can't have this move as a wave 3 is because if you look at this as I don't know, like 1 2 3 4 5, which I was looking at, this can't be a 3 because I already have the level drawn. The level you'd need to see tick to mark it as a wave 3 would be this 202 level. And this was the day it got up to like 199, and then we had the halt, and I was actually sleeping for that, and I was so mad about that, so I ended up buying like the lattice alarm clock on the market. So I never do that again. But this can't be a 3 here, just because you need to take this level. Otherwise the 3 is shorter than the 1. So to everyone who had that count, sorry, but sorry to crush your dreams, but that doesn't work. Anyways, that being said, now I'm going back to the primary that I have and going to break it down a little bit more. So, the way I'm looking at this is the top of the wave 1 that I was talking about in my last video, which should be followed by, a big sell-off to ideally this 618 level at 125. And I'll show you the reasonings, like why there's a bunch of reason to expect that moving forward. But, coming down below, or coming down to this level down here, would basically confirm the whole wave 2 idea that I'm talking about, right? Where we come down to here and we retest these lows, fill this gap down here before we start to leg up again. And I say this for, obviously, my charts, but the thing is, I am purely a technicals guy. All of like the news and press releases or whatever that you see in relation that like affect the pricing, that's not by accident, okay? Like it's not necessarily part of the algorithm per se, but like these are like the moves that you see based off of news. It does shake people out, but like there's a reason you see it when you do, right? And so like this is a pretty cool subdivision too. And so if you look at how we have this count, or we have this wave 3 up here in white, right? 1 2 3 up to here. You should have an ABC into 4. and you'll have this was the day we had the first move down, A, B, then this move, C, should be equal to the length of the A, and then you'll actually see the level doesn't extend to the right, but the level to watch for was this one right here, 159.3, and we ticked 158.5, so, within less than $1, still pretty solid. So really quickly, A down, B up. Your A move down was, let's just do math so you can, right? A move down being a 36-point move, so if this is your B, your C should be another 36-point move down. And if we go to the low, this was a 37-point move down. So, A, B, C, there you go. And finally, your 5 up to here, which ended up ticking the Fibonacci ratio, wherein wave 5 is actually equal in length to the lengths of waves 1 and 3, so an extended 5th wave. This just makes the most sense to me. Anyways, furthering down the line with this view, another thing that really had my attention was, as soon as we saw that move in after hours, I immediately thought that it was very similar to this move in January, where they had the news of the NFT marketplace in the works, which, call it what you will, if it was like an actual press release or not, we know what happened afterwards. And again, this is what I'm saying. I only look at the charts. I don't really care what the news is, right? There's a reason we see the ticks that we do. And whenever you see a level hit that you have outlined, you need to ask yourself, what is the significance behind this? Because there's always some significance. And so the thing with waves is you're trying to essentially go like down the line of possibilities to see what outcome is the most probable. And so the fact that we also got that announcement on a Thursday after hours, exact same thing as this, was a huge red flag in my book. And obviously, if this, or looking at it in the moment, I think it was not the expanding, the extended, yeah. So if we were looking at this as like a wave 1 up for a continuation move, we should not have fallen below, say, like this bounce here would have marked the low and we should have begun to trend up. But I did not think that was the case, and so I didn't, go long. Full disclosure, I did have puts. That's just, I'm not going to lie and tell you that I was long here because I thought it was going to go down. There's no reason to lie about that. And I gave all of Discord my reasoning. I don't really post like this super in-depth stuff on Twitter as much anymore, just because what's the point in telling people stuff like this if I'm just gonna get torn to shit? I'd rather tell it to people that actually care and want to act on it with me. So really quickly, with that being said, if you are interested, shoot me a DM on Twitter. I'm not gonna talk about this anymore, but back to this count, right? So if we're looking at this as an A leg down, and the reasoning for that is because if you're looking at, I was already looking at this as the top of a wave 5 here. So we should have 5 legs down to mark the A, then 3 up into B, and then 5 more into C, which should complete the wave 2. And I'm going back to this one. And so looking at this on a really small scale, this was actually like the little mental math tweet that I put out, if you saw that. But 1, 2, this move is a 3. So then I already have the ratio drawn, but the A leg should have terminated between 155 and 149.6. And with this tick right here, that was convincing enough that was the low of the A leg, not the entire correction, just the A leg, okay? And so, kind of tying back into this analysis, we had a really shallow retrace up, but the giveaway was, here's the giveaway, ready? I'm going to go to the clean view. The giveaway was this. You had the move up in after hours, and then you actually lost the low you had before. Same thing here. Same exact thing. And so the thinking is we are going to continue, this downtrend before starting a leg up. And it won't necessarily be like this. I'm not saying it'll just be like a slow bleed out, even though that would hurt option players the most. The levels that I have outlined are is this 125, the 618. And this 1-to-1 is, so again, digging a little bit deeper into like my whole process, when I'm drawing out ratios, I look for confluence with degrees. And so if this is like the larger degree target that I have for this downtrend to end, I already have this marked as the A wave. And so if A bounced here, B should retrace. In an ideal world, your B wave will come up, higher than the 50% level. And I retest the 618, 786, kind of go down the line. But I will say the 382 rejection gives massive confluence to this downside level I have down here. So, the SparkNotes version of what I just said is if it rejects, around 174 early in the day tomorrow, then I would seriously be on the lookout for this, just because that makes the most sense. And also, you know, going back to the visualization, right, as cool as it would be for it to just explode out of here, I find that highly unlikely. And then another thing, you know, I've seen, you know, my last video I talked a lot about the January similarities, you know, back in like this area of price action. But here's the thing, I don't want to be like, oh, I was the first, I thought, you know, that means nothing. But my issue with that is when everyone starts to see the same thing, that's when I get worried. You know, if everyone's like, it's the exact same positioning as here, it's gonna rocket on this day, you know, you should really be raising your eyebrows at that and think, okay, if everyone is under the impression that positioning is equal to, you know, X date in the algorithm X amount of days ago, then chances are, like, it won't repeat itself. And I only say that because you have to think about it from the position of the market makers. If the quote-unquote logical thing for it to do based on previous price action is for it to just rocket up this week, then if it doesn't rocket up, a lot of people are hurt because they believed, you know, that past performance would replicate itself. And okay, yeah, enough of that rant. But anyways, this is like my downside level. I've explained that well enough. I guess onto bull case now quickly, because, you know, this could very well be wrong. Is it the expanding one? Yeah, okay. This is a bit much, but the expanding count here, it's pretty similar to the bear case, but with this, we would actually be bouncing at 137 versus 120 something down here. I think this is less likely, but expanding counts should always be given consideration nonetheless. Expanding meaning, right, where this move, you see the count here, where you have 1, 2, 3, 4, and then you have the 5 up to here, which marks a larger wave 1. In which case, we should have ABC, ABC, and then 1, 2, 3, 4, 5. And the 5 should terminate at this 1:618 ratio, which has, you know, a more or less perfect confluence with the 50% larger retrace level. So basically what that means is, in a more bullish interpretation, it will bounce at like 137 and then begin its next leg up. I think that's unlikely, but it's still worth laying out. And really quickly, I would say where all of this becomes invalid, like the bear view, or not this count, it's this. Where all of this becomes invalid is a break above, you know, the previous high we had at 202, 203. And if we break above there, then, what is that called? So yeah, a break above this 202 level implies that, you know, the correction is done, meaning like the wave 2 is already complete and the wave 3 is about to rocket up a lot higher than we're currently at now. But you need to see a break above this 202 level. It would probably come up, but then, you know, sell down hard again before it starts to move up more. Just laying that out, I think unlikely, but still good to know. I guess also really quickly AMC, and see also really quickly, yeah, another giveaway to watch out for the big sell-off on Friday was because, so obviously I like to watch these two in tandem, but in the after hour session when GameStop rocketed up like 30, 40 bucks, whatever, AMC could not get above this, I'm not even going to say it in wave terms, this critical level here. And so that was a signal to, you know, watch for GameStop to sell, and, you know, because they move more or less together. But yeah, just something to note. But that being said, I think I covered about everything. You know, if it does come down to this expected low at around 125, I think it would come to like 123-ish, just because that would fill the daily gap, but, you know, negligible difference. If it goes to there, then the next level would be looking to the upside, would be about 330. So that's like a 200 plus point rip from the low that we see there. Just laying it out. But now you have a little roadmap. I think I covered about everything. Here's the count again if you want to look at it, study. But cool. You guys know where my head's at now. Thanks for tuning in. If you learned a thing or two, awesome. If not, you think I'm full of shit, thanks for tuning in anyways. We appreciate the viewership. Until next time. Peace.